What's going on? Good morning. Welcome back to another pre-market report video. Just realized I did not schedule it correctly. That's why you don't see it on your feed. I had to go and search for it. Well, I figure we would just do the video, and then other people will watch the recording. I guess. All right, let's jump right into the content because I do think it's a very important trading day today for the market. Let's jump right into the economic news. You cannot make this stuff up. Like payrolls, non-farm payrolls came above the expectations. And not only that, the unemployment rate came down. I've told that regarding the employment, good news is bad news. And the market obviously reacted very negatively to it. Now, I'm not going to get fooled by the numbers, right? I just know that the Fed is going to take these numbers and try to be more aggressive. And part of the Fed job is not only raising rates, but psychologically to try to move the markets, okay, at the psychological level, not only with hard actions and moving the rates and so on and reducing the balance sheet, which they're doing, but psychological part has plays a very large role right here. Okay, now people are panicking because we have a 3.5% unemployment, and they think the Fed is going to be even more aggressive. I don't think they have room to be more aggressive though. That's my personal opinion. Then we have Williams speaking at 10. And what else? We do have at 3 in the afternoon, the CFTC numbers. I'll talk about this probably in a Saturday video. But that's fine. All right, let's jump right into the charts. And this is the most beautiful charts I've ever seen on the dollar. It is pretty coherent. And now this is the daily chart, so it's very bullish. Now we have had 2 days very bullish. Today we are going up a little bit, but we're hitting some supplies. It's yet to see if the dollar is going to react off of it. All right, so here was our long yesterday. Then after the long, we ended up blowing this supply on the dollar. So I was saying this is a supply. We have to trade along. If the other thing happen, if we blow the supply, the retest of the supply is going to be the perfect setup. And this is what happened. The market ended up dropping in the afternoon, and now it came back. It went up to the supply, came back to this demand again, and then we just skyrocketed to the upside after the news. Okay, now we're hitting this supply. I don't know to what extent this supply can work. It's a pretty high quality supply. Now we haven't had a strong leg out. So what I mean is that yes, we dropped here quite a bit, but it's not something that is a very important drop, right? It was a very slow drop. We don't have a sharp move down. So I want to be careful with this supply. Nevertheless, I do have it right there. Is this, right? I don't think it's going to work. And the next level for me, I don't know if it's going to come into play today, is 113.28, right? But for now, what I'm looking for is, and I don't know if we will have it. If we will have it today, is a retracement to this, okay? For a continuation. So it's yet to see even this one or this one, okay? So we have to watch it in real time. I don't like it. I don't like this too much this week. I think these weeks are not legit. I need to go and check the US dollar on the Dow Jones index and see these weeks, what happens with these weeks, okay? But certainly this one is important. The level at the London Open today is right here. So it's right in the middle. So that's why I say this could be this one or this one. So London Open was around here. So I will put these circles here so I can pay attention to this. Okay. There you go. So that's London Open. Stock, good morning. I always refer to the London Open because it's the highest volume in the trading session, even after the FX market here in the US Open. The London Open is always a higher volume session. Let's continue on. So the chart here in the dollar is beautiful. I think we took advantage of the opportunities yesterday. Let's see what we can do today. Very patiently and very calmly, we will wait for the setup. If it gives us the setup, then we will execute, okay? We won't try to rush any trade. The volatility today is going to be a bit higher. So my recommendation, this is not a trading recommendation, but it's more like an approach towards the charts today. My recommendation is not to get excited because of the movements and try to watch the candles in a more like in a bigger picture mode, because if you go to a lower time frame, you will see very big fluctuations. Like it's going to be for me, it's going to be volatile today. All right, the 10-year yields, for the love of God, 3.9 again. We didn't spend much time low, like 3.5, just one day, couple of days, okay? And then we're back to 3.9. I think we have the potential to go above 4 probably next week. So markets don't like high yields. Market don't like high rates, okay? That's why the market is reacting negatively. I do have some supply right here, but fundamentally, I do think this has some more room, right? I will pay attention to this level. It's 39.66, right? And if you guys know, I like to see this real time. The VIX, another coherent chart that we had here, the demand was working out pretty nicely yesterday, and I'm impressed. Even though the markets are dropping a little bit, this thing is not even gapping up. It's actually lower than yesterday. Okay, if we go to the 30-minute, yes, we were dropping before the news. We were dropping before the news. Now with the news, we spiked up, but we never broke yesterday's high. So I don't think investors are panicking. And I've said this. This chart is pretty interesting to me. Something is going on behind the scenes. So two possibilities that I see off of this chart is even big funds or big institutions are gonna get caught with their pants down, number one, or the market is going to turn around at any time, okay? Because I don't think that 30 for the amount of uncertainty that we are having right now. Oh, and this is another possibility, is that sustained VIX at this level we will have for a long period of time. And that will mean that the market is not going to recover, but slowly is going to continue to go down, right? That's a third possibility. But what I'm trying to say is that we haven't had any spike, any real panic in at least represented in the VIX. Okay, yeah, we had 34. But if you go to the daily, Let's go to the daily and let's get rid of this, right? I know the pandemic was a lot more uncertain. So we had 84. We haven't had that here, right? And we're dropping, at least on the NQ, like 30%. The pandemic was like 40%. Yeah, it was a lot sharper. It dropped in like 1 month or two. Now let's see if we can go to the monthly. Yeah, look at the levels here on the Great Financial Crisis, 96. Okay, so it's pretty sharp. That's why I say, look, we have been spending a lot more time here around 30s. Like if you see here, these are normal pullbacks on the market, right? 20%, 15, 10% correction in the market. So you have these big spikes and immediately goes down, right? Not in this case. We have had sustained levels are around 30, between 20 and 30. All right, so let's continue on. Taurus, welcome. Crude oil hitting higher levels here. So we broke the supply. Let's get rid of this supply. I don't think this supply was very significant. Okay. My retracement level is a 92. Will be still in the trend line to the negative side. Around there. Right, yeah, the trend line is not very coherent though. Okay, but 92 is my level. Then the retest of 83 for a continuation to the upside is pretty logical too. I'm impressed too. The dollar keeps going up, and this thing goes up with the dollar, right? The rest of the commodities, copper giving up. The metals are reacting pretty nicely to the supply. So you have gold and silver still holding on in the supply. Lumber creating a bit of a spike yesterday. All right, so this is the key chart for me. I do have the ES, right? The ES is among all the equity markets. The unemployment report was not bad. It was terrible. And when I say terrible, it's terrible for the market. But the report itself was pretty good. Unemployment dropped to 3.5%, and the NFP came above expectations. Now the Fed is obsessed with jobs. If I'm not an expert in this topic, but if you see how unemployment behaves, is the most lagging indicator on macroeconomics. So you cannot, my opinion, that you cannot base any strategy based on the employment itself, but around other, topics that will influence the employment, the job market. Because the job market, I think, is the most lagging indicator of all. So for me, the Fed is taking a huge risk on basing their strategy on the unemployment, right? They can overdo whatever they're doing, right? That's my opinion. I've been studying this for 5 years. I'm not an expert, like I said, but I think they are taking a huge risk of overdoing with the tightening process here. I know inflation is brutal, and a lot of people are suffering because prices are going up. But this is a white elephant. This does not move in 1 month or 2 weeks. I think this economy takes months and years to get a new shape, right? And inflation, if you have a expectation that inflation is going to come to 2% in 3 months, I think is very unexpected. Very unrealistic, right? I think it'll take a lot of time. It'll take probably 1 year to get back to those levels. If we get back to those levels. All right, so the ES, this is a chart that I'm paying attention today because it's different to the NQ. The NQ right now is breaking this level, but the ES broke it. So here's the deal. The ES created a double bottom here and tried to push higher. Now we're breaking to the downside. Now look at the NQ. That double bottom is this one, right? So the ES came to this level, filled it in, and wanted to reject. So I think the ES is the chart that will give us a clue or where to enter, right? Where to enter for the short today. Now I need the dollar because the dollar is going up, and when the dollar is just going up, it doesn't work for me. I need the dollar in demand, okay? So meaning I need a rejection. So probably the rejection on the ES is going to be here, right? For these to these 30, 33, 35, between 30 and 40 level, right? And like this is one of the scenarios for me on the ES. And for the NQ, that's the thing. It could be up to this level, okay? We don't know. We do have this level. I think it's too close. And if we just come to this and we reject to the downside, then we will have some we will have to be more aggressive into this short, okay? But I want to see the internals and the tick chart telling me it's okay to engage in the short, right? I don't want to short into demand. So I do have this demand at 264. So I want to be aware of my risk and reward ratio. I don't want to short here at 294 and have just 50 points of room, okay? That's the thing. I need the retracement because we're coming down already, okay? Now, here's the thing. The market is so unpredictable that we don't know what's going to happen. I want to always pay attention to my internals and the dollar at all times. Yes, the majority of people are expecting a drop today because unemployment and so on, right? But we can get a surprise and the market goes up, okay? You never know. That's why you need to focus your attention into the technicals, okay? Is the setup there? Let's go do it. Don't get biased because one news report came out and you think that the market will do that. Don't do that. Like don't make decisions based on what you think. Make the decisions based on what the market is doing. Okay? But this is the level that I'm watching for the ES, okay? Does the chart, this is the chart for the NQ. I think I will be watching the ES at all times today just to see if we are at that level and we have an area here on the NQ. It's going to be hard for me. If we go to the 1 minute, we don't have much in the 1 minute, probably here. I'm gonna get rid of this one. Probably this one. Okay? Or either this week. Oh my God. Thank you. Probably this week. All right? But I want to watch it at all times. The US dollar index is the most coherent chart right now. It's been very useful. For those guys who were not here, this is the dollar chart. It is behaving pretty nicely. Like if you see here, this was our long yesterday. We blew the supply, we came back, this is the point where the supply turned into demand and the market ended up dropping from this point. You see that? And now we were retracing, then the market, then the dollar came here to the London session, right? In the London session, sorry, and then rejected to the upside. And the news came and they rejected to the upside. That's why I'm a firm believer that if a level is good, no matter the news report that is gonna come out, that level is gonna hold. Okay. So that will depend on the level of confidence that you have in a level, right? And at the end of the day, if the level is not good and it blows your zone, it's just one trade. Okay. You cannot put everything in just one trade. It's just 1 hour, right? You're risking X amount of money according to your account, 1%, 2%, whatever you set up. And that's it. At some point, you got to take a risk. Is the market is uncertain enough for you to have an assurance that one trade is going to perform in some way, right? That's impossible. For me, every trade's outcome is completely random. Every time I put a trade, I already account for that money out of my trading account, okay? That money is gone already. I think it's a good attitude to have. All right, so this is the London Open. I want to mark off the London Open. I know there's nothing here because we blew through that level, but there's some trap traders right here that are shorting. Now, we're coming off of the supply, right? Let's see if the dollar holds this level, then we can have probably, depending on where the market is, and I'm gonna be very responsible to the saying this. Like, we could have a trade at the open. That's not very usual for me. Like, here's the ES, right? I want to see the dollar holding here. Okay, if the dollar holds this area, we might have just a trade at the open, a rejection here, and then a continuation to the downside. Now, like I said, the news report was good, but it's bad for the market. And from the other perspective, everyone is having that information. Okay, so when everyone has the same information, I think the market will react in the other way. Okay. All right, so that's it for my pre-market. Yes, correct. Cool. Yeah, you just play the probabilities. If you're not able to think in probabilities, you cannot make it in trading. It's very hard, because if you're caring for the one single trade, you're gonna get disappointed because it's completely random. Thank you, Rich. I'll see you guys in 10 minutes. Okay. Thanks for watching.